Hey everyone, it's Mark here at TSLA, and Tesla had a good day today. That's kind of surprising, so I'll take anything I can get. I'm sure you would as well. As you can see on the screen, Tesla closed at $269.06, which is a 3.48% increase over last week. That's a $9.04 change per share. Now, we kind of drew some lines, and I'm on the minute time frame at the moment instead of the daily or the hourly. So I just wanted to kind of show that the thought process is what we had, maybe it's taking a little longer to pan out, but it's kind of what we might have thought the price action could be over what I thought would have been maybe a 2-day turn time. But now it's been 3 days since earnings, and I would say that we're kind of in the same thought process. We kind of closed at the 270. I think we all kind of figured 270 would have been a strong resistance, though it's an ironic resistance because it's in the beginning of a week. We're not close to an expiration for anything. But what I think it is that there's some decent news that came out today. And that news is what we're going to switch to right now on the browser. First things first, we're going to talk about what is a downgrade, but actually turned out to be relatively good. So let's ignore this for a second. And looking at this article from Investors Place, we see that Tesla's stock dips on UBS downgrade. So that is true. During the early part of trading, I would say during the pre-market trading, Tesla was pretty low. And it was actually very, very low after hours on Friday as well. I think we talked about that. It dipped pretty harshly on some type of odd news, maybe some rebalancing effects that were lingering for the Nasdaq. But so UBS came out and said they're downgrading their Tesla rating to underweight from a hold, and they came with an increase of the price target for the stock to $270 per share. Ironically, or not ironically, or just maybe coincidentally, it closed right around there as it provided some tough resistance to get over. So this is interesting. A lot of times where UBS downgrades something, the stock actually does the exact opposite and it rallies. And it could be just the timing because Tesla's been pretty oversold for the last couple of days. But this is what you see from a lot of brokers and dealers and analysts and banks is that, they don't like the fact when price goes up faster than they thought it should go up. And that's the real reason why they want to downgrade something or lower the price target or raise the price target. It's just because the increase of price to them is too fast for comparison to the rest of the market, obviously. The thing about it, though, is that there are so many big names that have reached their near all-time highs or beat their all-time highs, and Tesla is down much, much more than that. So I think they should be really focusing on other names, be it like a Meta or a Microsoft, before they start turning their eye to Tesla, downgrading the stock while Microsoft gets 2 huge upgrades today, right before their earnings tomorrow night. And we'll take a look at that in a second as far as earnings go. So the other bit of news that came out was the filing of the 10Q for Tesla, which is kind of like an informal update of the company, meaning that it doesn't have the same auditing that the quarterly reports would have. But regardless of all that and all the numbers, there's interesting areas when it came to their update for the company, their kind of guidance for the company. And it was under automotive demand, sales, and deliveries and infrastructure, which is located here in the yellow highlighted area. They go on to say our cost reduction efforts, cost innovation strategies, and additional localized procurement in manufacturing are key to our vehicles' affordability and have allowed us to competitively price our vehicles. And what they're saying is that, and it was obvious from the earnings report, that they were able to kind of maintain, not really keep the same exact margin percentage, but maintain the margin while reducing the cost of some of the cars severely. We're like, think about the S and X, $7,000, $8,000, $9,000 depending on region. The Model 3 had how many, like half a dozen price cuts within the last 5-6 months. But because they're able to lower their cost of production, lower the cost of the materials going into it, and making the overall company more efficient, they're able to pass these costs onto these savings onto us as customers. Highlighted in blue again, these macroeconomic and industrial trends have had and will likely continue to have an impact of pricing in order rate for our vehicles and in turn our operating margin. So this is something they kind of talked about in the quarterly report, and maybe this is, in the call, maybe this is how they kind of should have approached how they're answering questions about margins, or not really answering questions about margins, but kind of like front running those questions and talking about their margins. And the market didn't mind this line at all, because this is kind of just a nicer way of saying what Elon was talking about, where, he can envision one day where a car can be sold with zero margin, right? So the analysts and they don't really like hearing that kind of stuff, because they just want you to say, look, we're going to do everything we can to make as much money as possible, and that's what we're going to do. And Elon doesn't really fall in line with that, because he kind of knows the pricing power that Tesla has. The pricing power in the sense of they can cut pricing, maintain margins, make profit, and other people can't match those same costs. And so they have to charge our customers much, much more for a vehicle that is much, much less in offerings, much less in the ability to get range, and all that kind of stuff that comes with a lot of the OEM manufacturers. Like, if you just look at the quality of the Volkswagen vehicles, they're just not that great for the money you're paying. The next sentence in green says, we will continue to adjust accordingly to such developments, and we believe our ongoing cost reduction, including improved production, innovation, and efficiency at our newest factories and lower logistics costs, and focus on operating leverage will continue to benefit us in relation to our competitors, while our new products will help enable future growth. So they just have so much more volume. This is what volume can do for you. It can lower costs. Let's say you're in a contract for lithium, and you're the person providing the lithium to Tesla, and you're seeing lithium costs just drop severely over the course of the last year or so. Are you going to force them to stay within that contract? I mean, come on. They're so much, they're responsible for so much of your profit probably, that you kind of want to work with Tesla right now. And I wouldn't be surprised in the second half that we're going to see those cost cuts. And let's say there's still some Model 3 price reductions over the course of the next 2 months to get ready for Highland's release. I wouldn't be surprised, even with the cost cuts, that you maintain that margin, like a 19%, 20% margin, as that there's a tailwind when it comes to input costs, especially material. The next section is talking about energy generation and storage demand, production, and deployment. The long-term success of this business is dependent upon increasing margins through greater volumes. We continue to increase the production of our energy storage products to meet high levels of demand, including the announcement of the mega factory in Shanghai. For megapack energy storage, deployments can vary meaningfully quarter to quarter, depending on timing of specific milestones. For Powerwall, better availability and growing concerns over grid stability have driven consumer interest. We remain committed to growing our retrofit solar energy business by offering a low-cost and simplified ordering experience. In addition, we continue to seek to improve our installation capabilities and price efficiencies for solar roof. As these product lines grow, we will have to maintain adequate battery cell supply for our energy storage products, ensure the availability of qualified personnel, particularly skilled electricians, to support the ramp of solar roof. So there's a little bit of addressing of the solar roof issue, where there's, you're not really seeing the growth of the industry, but the reality is the overall energy storage part of the company is they're able to, and it's in these numbers in the report, but what it's getting at is their storage systems, they're able to drive an 80% increase in margin with lower ASP. So their average selling price for some of these mega packs are much lower than they were quarter over quarter, yet they're quarter over quarter, they're making substantially more money. And when we get another mega pack factory going in China, and I'm sure they're going to build another one next year, that you're going to see energy storage mega packs become a very significant part of the what analysts are going to be focusing on when it comes to quarterly reports, questions that they're asking during those conference calls as well. So let's get to an overall macro picture real quick. So this is going to be a very action-packed week for earnings, especially a lot of tech earnings. There are some big Dow names as well. Dow has been very strong. We've been talking about that. But we also are talking about why the NASDAQ or the tech sectors are looking really weak, it's because people are wanting to de-risk before the close of Tuesday. So Tuesday's close is going to have Alphabet, Microsoft coming out with their quarterly reports. The next day, on Wednesday after the close, you're going to get Meta. So within 2 days, you're going to have a lot of what basically is the weighting of our indices reporting their earnings. And we need to see, look, has there been a substantial way to monetize and increase your bottom line because of AI? If not, we sell you off. And if the results are kind of like, oh yeah, they're like in line, they're fine, then you might see a very flattish to kind of a reddish day for those tech names, while people are saying, because that's the cue that the economy is okay enough, that, okay, the tech has its turn, and we're going to continue buying IWM, which are small caps. We're going to continue buying down names because they've been beat down. We want to find names with more upside in the short term, because that's what we're needing. Funds are needing ways to show their clients that they're able to turn a profit this year. They've been hurt really bad because they've been short for so long this year. They're needing to either get a big short and the market sell off because of really bad earnings, or they need to get into beta with the small caps, or even some of these down names that have been flat or lower for a very long time. And you'll see some of those down names come in. We got the McDonald's of the world. We got the energy names. So keep an eye out for that. Just know we'll talk about FOMC more tomorrow. We'll talk about how earnings are going to play into this a little bit more tomorrow. I need to just make this a little quick video just because I'm going to be heading out of the house in a couple of minutes to watch Oppenheimer. But here's the market calendar for the week. So we already went through the flash services and PMI for U.S. manufacturing PMI and U.S. services PMI. U.S. services PMI is looking grim. Manufacturing actually kind of held its own. Which is the kind of interesting mix, you know what I mean? Like that's kind of interesting, where we would have thought the opposite. So we're going to have some home price index information tomorrow. Consumer confidence is always kind of a weird thing. I don't know why the market likes to react violently to that. So just keep yourself kind of on point, nimble for 10 a.m. Eastern time tomorrow morning. Wednesday is going to be the big day. Of course, there's new home sales, but the really big, not problem, but it could be a problem. The really big news is going to be the FOMC press conference. So the decision on the interest rates, that's going to be baked in. That's a 0.25% increase. That's what the market expects. And the FOMC never really wants to surprise the market. Look, if there's any, like, we all want interest rates to stop, but if you get a pause for this meeting, you will see the market sell off, because we don't understand why there'll be a pause. And it could be because we think the Fed sees something really bad happening in the economy that needs to kind of spur some economic activity. So that's a baked in 0.25 increase. But what you really want to be able to look out for that day is just kind of the guidance of what the next rate hike is going to be, or is it going to be a pause? We're going to have a lot of retail information coming out on Thursday. We're going to have the GDP report, which is going to be maybe the last. Is that the last? I wonder if that's going to be the first report of quarter two. And we're going to have initial jobless claims. Friday is going to be even bigger than almost any day this week, most likely. PC index is the most important inflation report for our economy, for the market. And this, we need it now, because the comps. Okay, so for August and September, those are going to be really difficult inflation reports to show good beats, or technically misses, for more upside for the market. So we need to see a really good core PC index miss here. Hopefully we get a 0.1. We just need those slight tenths of a percent beat, because we need to see slight progress on that. And let's go over to the charts real quick again before we wrap this up. So we're looking at Tesla, and we talked about it a little bit. The 270 made sense. It's got bought up a little bit in the after hours. It's always a nice thing to see. So yeah, it doesn't really make sense why it stays here, just because the expiration for the options aren't going to be until this Friday. But it's more so the fact that people are probably taking profit here. This is a really big move. This move was at the low for today. So at the beginning of the day, it was very, very red. So if you were just do a quick measurement from the low, if you bought that, and you held it the whole day, that's a 6% move. That's $15 a share. You buy 10 shares, you're making $150. So people are just taking profit because it kind of makes sense. It's a nice round number, like 269, 270. But the real levels we want to kind of look at are, we want to see it somewhere around the 275 area, which is the kind of the next resistance, which you're most likely going to get. It just kind of lines up with this kind of consolidation here, the peak on pricing on the day that the stock crashed during earnings. And after that, it's the gap. And we talked about the gap 280. Do you see that by the end of this week? Probably only with good inflation data. Don't be surprised if we get some consolidations over tomorrow, maybe over Thursday, maybe a big red day, because FOMC is usually a pretty bad trading day unless you're very, very short. Kind of keep that in mind. If you see anything big, and we'll just talk about it tomorrow, but a green open on FOMC is just an easy entry for short. That's not financial advice. Let's look at the overall market through the eyes of a comparison to the QQQ, which is, Tesla's a big portion of the tech index. And you're seeing here in orange, that's going to be the Dow. The light blue is going to be small caps, IWM. And the yellow is the SPY, which is the S&P 500. And you're noticing how there's this, and I've been talking about it, such a strong outperformance when it comes to these other indexes, and with the Dow especially being positive in the same time frame over the past about 3 or 4 days. The Dow has a really, really strong outperformance. But how long can it go? It's been about 12 out of 11 out of 12 days have been very, very good for the Dow. In the sense of the Dow, 0.2 is pretty good for the Dow, and positive is much better than being super negative like that the tech indices are going to be like. But this is not, like I said, I just want to make a point to it. Like, I know that if you're a Tesla fan, you're experiencing a lot of pain over the past couple of days. But if you want to talk about the overall health of the market, it's not necessarily bad to see what's called breadth, meaning that all the names are trying to participate in the trend, which is up, and at the sacrifice of people selling off tech to get into those names that might give them more room for the upside, the small cap names or the healthcare names, energy names, and a lot of the Dow names like that. So don't get too discouraged, but you should be encouraged by having a good day in Tesla, because it did outperform the QQQ by a substantial margin today. We can actually plot that and then move the screen to show just over the course of the day, because obviously if we just show it over the last couple of days, it would not be so good. But if you're looking at Tesla compared to the rest of the indexes over the past 2 days, even over the past day, you're seeing a very strong outperformance. And this is something we should be really thankful of, because this is an outperformance of some 5%, which is more than the beta of 1.8 that Tesla usually works with. So we take what we can get. Just be careful when we go into FOMC. Maybe we think about selling some calls depending on how that price action looks tomorrow. Look for like key levels like 275, even a 274. Like, basically, if you get any green, is that a time to sell covered calls? It might be. Okay, guys, thanks so much for listening, and have a good night. Bye.